this is Jordan, and this video is being recorded on the evening of Tuesday, May 19th, 2020. And in this video, I'm going to talk about silver and inflation expectations. And this video is a follow-up to another video I did, I think a month or two ago, and I was discussing basically when silver would outperform gold, and that revolved around inflation expectations. And in this chart here, I have plotted various things that are measurements of inflation expectations. So we have tips against regular government bonds, the 10-year yield, for example, industrial metals, the dollar, then the gold-silver ratio, which is inverted there. Now, if we start at the bottom, that red line there for the gold-silver ratio, that resistance or support, whatever way you're looking at it, that comes in at about 94, just so you know. So the ratio has broken down. If you're looking at it gold against silver, it's broken down and it is coming down. I expect it to continue. So keep your eye on the target at 94. I know there's also some support around 90 to 93. But for the purpose of this video, I wanted to line it up with the other. I want to do the inverted way to line it up with the other measurements of inflation expectations. And so we've seen a little bit of movement in these various charts. The biggest movement has been on the gold-silver ratio. And so perhaps that indicator itself is leading the rest of the inflation expectations indicators, because they have not moved a whole lot yet. But I mean, it's possible to say that, perhaps they've bottomed, so those are not going to go any lower, or inflation expectations at a bottom and they're not going to go any lower. One thing which is important to keep an eye on is the US dollar there. You can see it's kind of been consolidating, and there is a threat there that it could possibly break that blue line and have a mini breakdown. And so if that happens, it obviously would be good for commodities, and that is good for inflation expectations. It's also good for silver relative to gold. So bottom line, silver is outperforming gold now. Expect that to continue in the short term. But the measurements of inflation expectations have not quite really confirmed that yet. Now, this is another chart looking at the 10-year rolling return of commodities. I'm not sure which commodity index is being used here, because if you follow my work, you know that I'm not a fan of a lot of these commodity indices. The CRB or these other things are showing commodities at 50-year lows, when you just pull up a chart of the, copper, gold, silver, etc. They're nowhere near 50-year lows. So I hate these commodity indices. But that aside, this is interesting here. There are some people who are, they still think the deflation trade is going to continue, maybe even intensify. There's going to be this, huge move higher in the dollar, and rates are going to go negative. Commodities are going to crash. But with respect to the commodities crashing part, I don't know if that's a bet you really want to take. I mean, just from looking at this chart, it's already happened. I mean, the dollar going higher and commodities crashing, it's already happened. It's not a contrarian trade anymore. Now, the dollar it's doing really well. It's moving higher against a lot of the currencies of smaller countries, but it's flat against the euro basically. If you look at the Dixie, I just think that before someone gets too excited about those trades and thinking that, well, the economy's not going to recover, we're still in deflation, just keep an eye on charts like this, because this chart is telling you that that trade, at least being bearish on commodities, it's really crowded, and perhaps it's already run its course. And so if commodities recover and they sustain it, that is an environment where it's also good for silver, and where silver will outperform gold. So just something to keep in mind here. I think at some point, the market looks ahead. There's a lot of money being thrown at the financial system, the economy. More is coming. At some point, the economy is going to recover, and there is going to be inflation. That is going to be good for commodities and silver, as I already said multiple times. Now, last chart here. This is a weekly line chart of silver, and then at the bottom I have the net spec position of silver, and also the open interest in silver. Silver closed today at 1790. There's a confluence of resistance around 1850. I mean, whether you look at moving averages or the weekly, monthly, or even quarterly charts, they'll all display 1850 as an important level. So, I mean, that's an immediate upside target. It's very important. It's even more important, where does silver close the end of this month? Where does it close the end of next quarter? Those things could tell us how sustainable this rally is, at least over the next couple months, at least in the near term to medium term. But if you look at the bottom there, what's interesting is we know that sentiment in gold is getting a little too bullish now. I wouldn't say it's nearing a bullish extreme. It's not quite at an extreme yet. However, if we look at the sentiment indicators for silver, in particular the COT, open interest a week or two ago, that was at a 6-year low. A 6-year low, people. And if we look at the net spec position, now I like to measure it against open interest, and if open interest is really, really low, then that means the net spec position is probably going to be high. So you can see there it's about 23%, which is, it's kind of average. However, if you look at the net spec position just in nominal terms, just by itself, a week or two ago, that was at least at a 10.5-month low. So a week or two ago, silver, as far as the sentiment was telling you, this is much closer to a low than a high. So it tells you that there's room for silver to move higher. A couple other things. Number one, when silver emerges from a major low, it can potentially rally up to 100% in a year, 90 or 100%. That's a data and chart that I'll have to update. But I mean, that could put silver, potentially at $24, $23 an ounce early next year, basically in Q1. So, I mean, 1850 is the key resistance. If it can break above 1850, then 2021, the 2016 peak, that's a level to keep in mind. I think, as we're looking here at the short term, keep an eye on gold around 1800, because I think if gold can get through 1800, then just looking at the gold-silver ratio, that tells me that silver is probably going to get through 1850 and make it to 20 or 21 on this move. I don't know if that's going to take a month or 3 or 4 months, but I think it's going to depend on, is 1800 going to be a top pretty soon. I mean, it could be, and we could correct for a month or two and then go higher after that, but that's just something I'm thinking about. If gold goes above 1800, then I think we're going to see silver get to 20 to 21. So keep that in mind. All right, that's it for this video. Hope you enjoyed it. You can follow all of my work at thedailygold.com, and I have a premium newsletter. You can get information on that at thedailygold.com/premium. I focus on market timing and stock selection in the juniors. I did a big update on a lot of silver stocks and gave my thoughts on all that this past weekend. So subscribe. You can get that immediately, and much, much more. Look forward to seeing you there. Thanks again for watching the video, and I look forward to doing another one for you in the days and weeks ahead.